It's great to have you back. Welcome.
Yeah, great to see you.
Why do you say overreaction?
Well, yesterday really was an indiscriminate selling day. Did Tesla's valuation and fundamentals drop 15%? Did the broad market have a 4% decline in valuations? To us, it really looked like a lot of liquidation. I think investors are, of course, reacting to the White House warning of pain ahead. But it has been more of an equity sell-off than it has been in corporate bonds. So to us, 4% down days, yeah, I think it's an overreaction.
Yeah, how do you best explain that difference between what equities have done and what we've seen in IG and even high yield?
Well, I think on the stock side, markets are now saying, look, the new regime is we have to take the tariffs seriously. Now we don't know how long these tariffs might be. Will it hurt growth? And we've seen cuts from economists. But the bond market is saying, well, you know what? This is a growth scare. But the Fed is also now in a position to begin cutting because inflation pressures are abating. So I think the bond market is sort of pricing in a Fed put. The stock market saying, I'm not sure if there's a White House put, and then the Fed's on hold, and I think that's the divergence.
So which one should we be listening to?
Well, I think the Fed put, in fact, is probably coming back because the odds of a May cut have been inching up. They hit 54% yesterday. And, in fact, total cuts hit 3.5 cuts, which is now 2.5 or 1.5 more than the Fed's guided. But I think that the Trump put exists. I mean, I know they've explicitly said there isn't one, but look at yesterday. Tesla's down 15%, and on Truth Social, Donald Trump talks about Tesla. So I think a put exists. We just don't know the level when the White House intervenes, and then today's the Business Roundtable. We'll find out.
He does, but then he kind of ratchets up the dialogue as it pertains to the trade war this morning on Truth Social, regardless of all of the headlines surrounding tariffs and the trade war and what it means for growth and what it means for the market reaction.
That's right. And for a while, markets ignored those tariff headlines, and now they're taking it very seriously. But I think at the end of the day, if we take every headline at face value, then markets are completely paralyzed. And of course, that again creates opportunity because at some level, all these stocks are really attractive opportunities, especially something that's had a 50% drawdown.
I mean, you can talk about the NASDAQ being an overreaction at a 4% down day, but Tesla was up $500 billion in 2 months at the end of last year. I mean, was that an overreaction to the upside? This is what we're trying to figure out, right? Yeah. Where do we start out with in terms of valuation and investor expectations coming into this period when it's become a little bit more noisy?
Yeah, well, there used to be this term a while ago called rage selling, and I think these days with instant liquidity, markets have rage selling. And I think it's not just individual. I think institutions push a button and go flat. So I think that, we're getting whipsawed these days. And I don't know where to titrate that. Like, was Tesla worth double what it was compared to November, and now is it worth half? I'm not sure, but I think it's somewhere in between.
Meantime, there's still a lot of desk notes about CTA supply and the next 5 days. There's plenty to sell. Are you buyer that even if we bounce today, it's going to be more of a process?
Well, I think positioning does tell us we're stretched to the downside, and we know markets are oversold, and we know sentiment's bad. I guess the real tell is we need to have follow through because last week felt like we could be bottoming, and we failed Monday. But do I think that a 10% correction shouldn't happen? I mean, this is like the sixth correction of 8% or more since 2022, so it is pretty garden variety. But, getting down more than 10% to me is like we've got proof of a recession. And I think that that's why the data points next few weeks are going to matter.
Yeah. So if we do draw down 10, you'll want to talk again.
Have you ever heard of the stock market rising on bad news? It might sound like a paradox, but that's precisely the current attention-grabbing buzz. Fundstrat's Tom Lee recently shared his insights on CNBC, shedding light on why the stock market is behaving unexpectedly despite recent sell-offs. He uses this opportunity to reveal his shocking optimism for the Tesla stock while revealing the truth behind its downfall. Welcome back, everyone, to Investocracy.
I'll just ask you the question. I imagine those who are either interested in Tesla or thinking about buying Tesla, thinking about selling Tesla, what do you do now? Is this a bargain? Is it still overpriced?
Andrew, if you're a trader, which I put your timeline like 1-2 months, you probably are not a buyer right here. I'm a believer in where this company is going. I want to start there, but just focus on the fundamentals, because investing in Tesla over the last 7 years has had 2 phases to it. One is the momentum. That is either all investors focus, or second, fundamentals. And to answer your question, the investors are focused on fundamentals right now, and the fundamentals are deteriorating. To put it in a perspective, is I think that this year is going to be down from last year, both in terms of deliveries and earnings. The street back on January 31st was looking for 308 in earnings for calendar 25. That's drifted down to 285. I think the real number is 220. At 220, it's still 100 times earnings. And so that's the fundamental, and I think that's the vortex that the stock is going to focus on until they report their deliveries. I think that is going to be a disappointing number relative to expectations today, but serve as some sort of a relief to the stock, given it will be a good chance for investors to reset those estimates. So this is a pretty unique time when the indications, this gap between where the sell side is at versus I think what the reality of expectations are is pretty wide at this point.
So Gene, at this point though, it sounds like you're waiting. Would you, if you own Tesla shares and you were a bit of a trader, what would you do?
So if you're a trader, I would not own them for the next month until they report that.
Which means you'd sell them? Is that what you're saying? You'd sell them?
Well, yeah. Well, I would not own them. The trick in selling them, if you're a trader, yeah, I would sell it for. If you want to play it like week to week, if I believe the stock is going down, then you'd want to sell it. If you have like a 1 month time horizon. And again, the stock is in part factoring in what I'm talking about. That's part of this decline, but I don't think it's fully priced in. The vast majority of time, these reductions in numbers aren't priced in the stock until the actually numbers get reset. So to answer your question, yes, I would be if you have a 4-week view here into when they report their March deliveries.
At times, the stock market feels like a roller coaster that even the most seasoned investors find dizzying. In a surprising twist, Tom Lee, known for his bold and often bullish predictions, sees potential where others see peril. According to Lee, the key to surviving this topsy-turvy ride lies in understanding that the market's declines are a sign that a turnaround may just be around the corner. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
What does that gain look like? Meaning, when you look out, what do you think the stock could be?
So at just the highest level, this is probably the best positioned company when it comes to physical AI. And this is something that Jensen talked about on the Nvidia call, is this shift from right now generative to agentic AI, but then he kind of previewed what's going to be the main focus of AI 2-3 years down the road. And physical AI, of course, that's autonomous vehicles and what's happening on robotics. And I still believe electrification is a fundamental growth story. And so when I think about the 2026 numbers, you get a new vehicle, some new variant. It's a lower price vehicle. They're saying late this year, which probably means mid next year, but that starts to improve some of the numbers. And then this momentum piece, I talked about the fundamental, that's the focus right now as investors are fundamental, but I suspect that the momentum piece is going to come back, and that's just in the shiny side of what can happen around FSD and autonomy. So if they can make progress towards that goal with the CyberCab rollout this year, some of the testing of the service, I think that's going to kind of stoke investors' optimism that the numbers can improve quickly. And so as I think about 2026, I think this number can be 40% higher than 25, a pretty dramatic swing back. I do want to point out that there are like Troy Tesla does a great job of kind of angling in towards what the delivery numbers are. I think he's thinking that next year is actually going to be a down year too. So my view that 2026 is going to be a positive inflection I think that's probably slightly out of consensus, or to that magnitude is probably out of consensus, but I think that's what the setup, what we're looking at right now.
Digging into the data, Lee highlights that each year, the stock market rallies by a considerable percentage solely due to its 10 best-performing days. In 2022, these golden days contributed a whopping 21 percentage points to the S&P, shining a light on the importance of staying invested, not to mention the Trump administration's put, a safety net created by pro-business policies, and the Federal Reserve's intervention hint at future catalysts. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And basically, I met Elon in 2010, and it took me 4 years before I invested anything. And between 2014 and 16, I invested $400 million, and we made $6-7 billion on that. And then we invested in SpaceX in 2017 on. At $1.1 billion, that's now worth about $4.5 billion. I think that over the next 10 years in SpaceX, we can make 10 times. Elon thinks we're going to make 30 times. In Tesla, I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Ron, so there's 2 issues, I think, going on with Tesla right now. I'm curious where you land. There's the fundamental issue, which is just what's happening in the economy, how many people are going to buy cars, at least the products that we know about today, right? When you think robo-taxis develop, when you think new cars come out, all of that kind of stuff. That's the actual fundamentals of the business. And then there's the multiple question, which is really a market psychology question to some degree. I mean, they're related, hopefully, but there's sort of, as I look at it, sort of 2 issues. There's multiples are coming down in everything. But then there's the actual fundamentals of the business. So you're thinking a year out, it's a lot better. And my question to you is, what happens in a year from now to the fundamentals of the business? Meaning, are they selling more cars? Do you think that they're going to launch new models that we're going to see? Do you think the robotaxi product actually does launch and it's material to the business during that period? What's the sort of catalyst?
So fundamentals. So I want to get one thing straight, though. First of all, that we're investors in people for the long term. Question everything. Don't take anything for granted. Investing for the long term, exceptional, takes time. We look out years. Own it. We own things. We don't buy and sell things. The far as the fundamentals go, so I want to make sure we talk about other people too, other than Elon.
I'm not talking about Elon. I'm just talking about the business.
The major guy. So his business. I mean, you wouldn't have a business without him. You wouldn't have EVs without him. You wouldn't have autonomous driving without him. You wouldn't have the internet for every inch of the planet without him. You wouldn't have rockets that you can use without him. I'm an unbelievable engineer. And the fundamentals of the business, this is an inflection point right now. The last time I was on, the stock price was 160. And I was telling you that I thought that this was a really interesting time to buy because the the software was working way more. When they have cars, you have to have $150,000, $200,000 car. Our car is $35,000 car, and it's software. It's software and cameras, and so it's going to drive just like a person, and probably better, way better than a person. Each new series of introductions is dramatically better than the last one.
We stand on the cusp of what Tom Lee positions as an impending resurgence, driven by understanding market psychology and the strategic placements of best days. His advice? Be patient and don't abandon the ship just yet. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.